Hey, what's going on, Realty and fam? This is Brandon, your trusted realtor, and I'm coming to you with another amazing video. Today, I want to spend a little bit of time talking to you about a nuance of the loan process, and quite frankly, it is a bias potentially for many people and a unknown impediment for some people in getting into a home. But it's also going to be a great mix of market information and data that drives this analysis. So stay tuned so that way you can get the most information from this total discussion. Now, I'll set the stage by saying that in order to get approved for a loan, your lender's going to be looking for a couple things. The trifecta, the income and the history of your income. They'll be looking at your credit and your credit history, and probably the most important or driving factor is your debt to income ratio. And I've spoken about all of these in other videos, and all of these things taken together make up the decision calculus, in part, vastly, of what your lender will use in order to determine if you're pre-approved for a loan, but not only if you're pre-approved for a loan, but the type of loan that you're pre-approved for. And many of you may say that, well, it shouldn't matter the type of loan, or because, you have to, regardless, as long as I'm getting money and I can pay for it, it shouldn't matter the loan type. And then others of you are saying, I didn't even realize that there were multiple types of loan. I just was trying to qualify and get something. Well, there are different types of loans, and I talk about different types of loans in other videos, but the two types here that I want to focus on are FHA and conventional, which are the two most common loan types that we see in the ecosystem. So I want to talk to you first about misconceptions and lack of understanding. Now, quite frankly, there are biases regarding FHA loans and FHA buyers. And that bias is held by individuals who are investors and individuals who have never used that loan product, that have concerns about what they've heard from people around water cooler conversations. Things like the individuals aren't going to be able to perform, they don't have the down payment, the money that's needed, they won't have be able to close on the loan, etc. And for many people, these small things or perceptions or bad experiences drive them to shy away from FHA loans or FHA buyers. And you'll say, well, this isn't legal. This isn't something that exists. Legality, while it is important, and I hear what you're saying, everyone, every single day, in every aspect of the world breaks the rules. Look at the videos most recently about the couple that was cheated out of $500,000 for the value of their home in California. That is something that happens intrinsically every day. People are breaking the rules all the time. So get off of that high horse. The poignant discussion here is about having an understanding about the playing ground or the playing field that you're going to embark on in this loan process. And that I'm going to support with some data. And that's where I want to move to, is the actual data. Now, when you look at data from December 2020 through the end of February 2021, when we're looking at all property types in Washington, D.C., there were a total of 2,287 units that sold, equating to $1.76 billion from December through the end of February. The median sales price, and you've probably seen this in some of my market analysis and update videos, was $630,000, while the average sale price was $769,000, with 98.4% of all listed properties selling. Significant indicator of the trajectory of our market and where things exist. So you're probably saying to yourself, Brandon, that still doesn't paint the picture about the misconception about FHA or conventional loans that you talked about in the beginning. Well, let's look at the financing types, because that's where you have to dig deeper into the data. We already have that broader picture, or the broader base population of 2,200, almost 2,300 people that sold their property. Well, let's look at those sellers and the type of properties or the loan types that were accepted. Now, and this is where it becomes interesting. During that same time period, there were 1,682 conventional loans that were accepted and approved to be by sellers. 343 people paid cash for the purchase of their home, 70 people had an FHA loan type, and they were accepted during that period of December to the end of February. And the HPAP, which is the Home Purchase Assistance Program, 14 people used that program to purchase a home in DC, and their offers were accepted between that same time period. What to me, these numbers were breathtaking. And not only these numbers were they reaffirming, but they reaffirmed conversations that I've had anecdotally or on the side with investors. When I'm working with clients who have FHA loans, or when they're looking at offers and they ask, hey, what loan type is this? And that information is disclosed on your contract, your sale contract. And that quite frankly also weighs into a buyer's decision. And unfortunately, whether you want to, know it or not, real estate agents, when they're on the seller side, they have an obligation to the seller. And so they are not there to dissuade myths or misconceptions as it relates to loan types. They completely will stay away from that. And so if the seller has certain reservations, biases, or misconceptions about FHA or that loan type, then they're less apt to select that type of financing vehicle, especially in the seller's market. In the same vein, you have a host of investors in this DC region that are taking properties, buying properties, flipping properties, renovating properties. I had one particular investor tell me that he wasn't interested in working with FHA buyers, the conversation he had with me, because he's had a lot of issues with the program. We actually ended up winning the day, and my client's offer was accepted, but I actually had to educate him about the program. His issue was that he had purchased properties before, tried to sell it to somebody at FHA, and there was an issue with a double appraisal that had to occur. The issue there was just simple. He purchased a property and tried to resell it within a 120-day or 90-day period of purchasing it, and it was above 120% of the value that he purchased the property for. So by FHA rules, it just requires two appraisals to be done. Not a significant issue, and it's purely for the protection of the buyer. It's not usually an adverse, because he didn't understand that process and how it functioned and what the rules were. He had significant reservations. Now I've done business with him before, and he thanks me because he's like, I really appreciate you giving me that insight, because it's exposed me and helped me to understand how I can better renovate houses, but create access for opportunities for people who are using FHA, the FHA vehicle or program. So misconceptions and biases are intrinsic in all of us, and it drives our interpretations and perspectives of the world. And small pieces of information like their loan type will drive an individual's perception, which is also really critical and critically important, that when you're working with and selecting a real estate agent, that your agent has a clear understanding of these distinctions, so that way they can then combat these subtle biases that exist within the real estate transaction or process to make sure that you are the most victorious. Now, I also want to move to the next data point, because I want to keep this under 10 minutes, is the days on market. Now, 67% of the properties sold were within 0 and 30 days, and those that did sell received 100.88% of the original asking price, or the average property sold divided by the original price. While 15% of all the properties sold within 31 to 60 days of them being on the market, and they received literally 96% of their original sale price. So this just goes to show you that properties are moving, and they are moving at above, and reaffirming that we're in a seller's market. Unfortunately, because we are in more of a seller market, there are more nuances or requirements that sellers can overlay in their observations and reviewing their contracts. And the last thing I want to talk to you about is pricing. Over 1,000 properties, about 44% that were sold within what I call the sweet spot. This is within 120 or more people purchase properties within a certain price range, or $350,000 to about $699,999 is a price range that we're looking at. And about 44% of people that sold or purchase a home, of that 2,200 people, almost 2,300 people, purchase a home between $350,000 and $699,999. But there were more than 400 people, which represents 17% of that population, that purchased a home between $1 million and over $5 million during that same time period. So that is also, to me, telling of the financial power and forecasting of the financial power and the environment that we live in DC. Hyper competitive, hyper lucrative, and hyper engaged. So hopefully this has been helpful information for you to then go forth and make really and truly informed decisions. My name is Brandon. I'm your trusted realtor. If you haven't done so already, make sure you like, subscribe, and hit that notification button so you can stay tuned in and in tune to the latest and greatest realty in the DMV and everywhere else. Take care, and I'll talk to you soon.